Hello and good afternoon, everyone. Welcome to today's EIS session. Today's webinar event series is on tax issues relating to shipping law in Malaysia. Before we begin, I will just take a few minutes to briefly introduce the IMSML and then Mr. Bhupinder Singh. Um, First of all, everyone, for those of you who are already members of the IMSML, you would know of our background. For those of you who are new, welcome. We are the International Malaysian Society of Maritime Law. Um, the IMSML is an organization to discuss and push forward the maritime industry in Malaysia, and in particular in respect of maritime law. We do this mainly by way of education through the conduct of webinars, such as today's webinar session, as well as in-person workshops and seminars. We also discuss and take part in discussions with the relevant government agencies and related parties on the policies related to maritime law. As part of this process, in November, we are organizing jointly with the Maritime Law Association of Singapore, the MLAS, a convention known as the Asian Maritime Law and Business Conference. This takes place on the 28th and the 29th of November 2024. For our members, we should have circulated the brochure out to you. For the rest of those of you who have registered for our event today, we will also circulate a copy to your emails, which you use to register for this event. Please feel free to join us during the conference, as we will have many esteemed speakers over the two-day event. The brochure will have a full list of all the speakers who should be attending the event. If you require any details at all, please feel free to contact me or the secretariat. Now, without further ado, let's get started. We have with us today Mr. Bhupinder Singh. Mr. Bhupinder is a chartered accountant by qualification, and he is an associate member of the Malaysian Institute of Taxation. He has more than 37 years of experience across the Big Four and Fortune 100 MNCs, and he is also a seasoned tax professional. So we are blessed today because we have Mr. Bhupinder to talk to us from his experience in respect of taxation issues related to shipping income. Please feel free to ask questions if you need to. I believe the Q&A box is there. We will address any questions that you may have after the session. The floor is yours, Mr. Bhupinder.
All right. Thank you very much, Juan, for the introduction. Very good afternoon to all the participants of this webinar on tax issues related to shipping income. I will today try to cover a few items. If we can move to the next slide on the agenda, please. Sean, can we go to the next slide? Yeah, okay. So this is what I intend to cover in today's webinar. We'll talk about how is shipping income taxed under the Income Tax Act. We'll look at income earned by offshore support vessels. How is that subjected to tax under the Income Tax Act? We look at some withholding tax issues related to leasing of ships and offshore support vessels from non-residents. And then basically, what is the current position taken by the Inland Revenue Board of Malaysia in relation to treating shipping income if it arises from, time charter arrangements, bareboat arrangements, voyage charter arrangements, and so forth. What is their position vis-a-vis the law? All right. We look at the double tax treaties and how they work together with our Domestic Income Tax Act in terms of providing relief from taxation of shipping income. And lastly, I'll just run through very quickly on the service tax implications because, as you probably know, sometime in March this year, they have widened the scope of service tax to include logistics services, which includes transportation, and all the ancillary activities related to transportation are now within the ambit of service tax. So we'll briefly run through that, and I'll highlight to you what is the impact of those changes to the shipping business itself. All right. Let's go on to the next slide, please. So the scope of taxation in Malaysia, right? The general scope of taxation is very much territorial in nature, right? So we basically tax all income that is accruing in or derived, or basically what income is earned from carrying out activities in Malaysia that will have a source of income in Malaysia, so it will be subject to tax in Malaysia under Section 3 itself, right? So income that is received in Malaysia from outside Malaysia will also be subject to tax. But in the last 2 years or so, or 2 or 3 years, we have seen they have brought some changes to the law where they have now attempted to bring foreign source income within the ambit of the Income Tax Act itself by removing the exemption which was previously given under paragraph 28 of Schedule 6 of the Income Tax Act. So there is currently a Gazette order that exempts foreign source income in the form of dividends, which are received by companies from overseas up till year of assessment 2026. And for individuals who earn income from overseas, whether from employment or other sources, then that income continues to enjoy foreign source income exemption again, right? So although the scope is territorial, but we have now taken away the exemption under Schedule 6. So any foreign source income other than dividend income or any income received other than by an individual will be subject to tax in Malaysia when it is received in Malaysia, right? But the banking, insurance, shipping, and air transport industry has always been taxed on a worldwide scope of taxation, right? So that's been there right from day one. There's no change. And so shipping income will be taxed on a world scope or wherever it's derived from, right? So that's generally the scope of tax in Malaysia. And in particular, for shipping business, you will be taxed on a worldwide scope of income itself. Okay. Next slide, please. All right. So the relevant section in the Income Tax Act, which basically brings shipping income within the ambit of tax, is Section 54. So basically, it says that if you carry out the business of transporting passengers or cargo by sea or air, then that income will be treated as a taxable source of income, and it constitutes a business source, right? So you may be carrying on shipping business and you may be carrying on other businesses. The shipping business will be treated as one source, a business source, and your other business sources will be treated as separate business sources, right? And then again, how you compute the taxable income from your business sources in relation to shipping. There are prescribed rules provided under the Income Tax Act, which I will share later with you all, on how that income will be, the taxable income will be calculated itself. And again, I think for shipping and air transport income, the rules are very clearly laid out in Section 54, which I will go through in a short while with you all, right? So we can go to the next slide itself, right? Now, resident, right? Now, basically, for a company to become a tax resident in Malaysia, the management and control of that company must be carried out in Malaysia itself, right? So that means for individuals, they look at the number of days you spend, but for a company, generally, it is whether management and control is exercised in Malaysia, and that basically means if your board of directors meet regularly in Malaysia to conduct the affairs of the company, you're a tax resident in Malaysia, right? So basically, Section 50 says here, subject to Section 54A, where the person is a resident for the basis year of a year assessment, his gross income and all those things, right? Adjusted income, adjusted loss, statutory income, will be ascertained by reference to his income therefrom, wherever accruing or derived, right? So that's why, as I mentioned the world scope of taxation applies to the income of a company that is tax resident in Malaysia that carries on a shipping business. So sea air transport undertaking, you are taxed on a world scope basis. And if you're a tax resident here, obviously then you will be liable to subject to tax in Malaysia. Now we'll talk about 54A in a short while, but there is a specific exemption under the Income Tax Act in respect of shipping income received by a Malaysian tax resident in respect of shipping income earned from carrying out operations using Malaysian ships, right? So if you're a Malaysian tax resident and you carry out shipping operations, transportation of passengers or cargo, both in international traffic, then there is an exemption provided under 54A, which I'll talk about in a short while. But the starting point is shipping income is, if you're a tax resident in Malaysia, then you are taxed on a world scope of taxation of your income, wherever accruing from or derived, right? Next slide, please. Now, again here, the gross income from wherever derived, as defined in this section 54, it's all sums receivable by the operator. So the word receivable basically means it's taxed on an accrual basis when that income has been earned, not when you receive the cash from shipping operations, all right? So whenever you have provided the shipping or the transportation service and that income is the income is earned by you, it's taxed on an accrual basis, all right? First receivable by the operator in respect of transporting by sea or air passengers or cargo in ships or aircraft owned or chartered by the operator. So this is a very important point here. So either you could own the vessel and you use the vessel to transport passengers or cargo, or if you don't own a vessel and you charter a vessel from someone or a ship from someone, and then you go about providing transportation services of carrying passengers or cargo, then you are also caught under section 54, right? So not necessarily that a ship owner will be the person who's liable to tax on the income derived from shipping operations. So it could be a person who does not even own a vessel, but he charters in vessels from other parties who own the vessels, and then he operates those vessels as an operator and earns income from the transportation of passengers or cargo. He will also be subject to tax, as that will be treated as his shipping income, all right? Next slide. Now we come back, we've talked about, just to recap quickly the points, we've talked about shipping income, where if you're a Malaysian tax resident, and then whether you are an owner of a vessel or you are just chartering in vessels and carrying out shipping operations, then you're liable to tax on a world scope of taxation. So that's the key points that we have covered so far. If you go into section 54A, it basically says that if you are a person who's a resident, a tax resident again in Malaysia for a year of assessment, and you either carry out the business of transporting passengers or cargo by sea on a Malaysian ship, so the key word there is Malaysian ship, or if you don't carry out those operations directly on your own, you let out on charter a Malaysian ship owned by him on a voyage or time charter basis, 70% of the statutory income for that year of assessment from that business shall be exempt from tax. Now, before 2012, as you can see the point below, before 2012, the statutory income from earning income transporting passengers or cargo on a Malaysian ship was exempted 100%, right? So it was a total exemption that was enjoyed by a Malaysian tax resident operating a Malaysian ship, transporting passengers or cargo. All his income was exempted from tax, all right? But in 2012, the government changed the law and said, I will not give you 100% exemption, but I'll only give you a 70% exemption, all right? That resulted in a bit of an uproar in the shipping industry in Malaysia. And obviously a lot of representations were put up to the Ministry of Finance, to the Malaysian Ship Owners Association. The Ministry of Transport was also involved in that. And following all those representations, they came out with some gazette orders, right, that allowed the 100% exemption to be maintained. Initially was up till 2014 to 2015, and then all the way up to 2018, and then from 2016 to 2020, right? And then there was a we go to the next slide. There was another extension given up till 2023, all right? But that extension, which was given up till 2023, came with some conditions in terms of how much of annual operating expenditure you need to incur. There's a requirement of having at least 4 full-time employees, and the proposal was also that an annual tonnage tax regime will be brought into place, right? And that still has not materialized. And basically, MOT is supposed to work together with the Malaysian Ship Owners Association to come to a landing on this particular topic. But I don't think there's anything that has been achieved as yet. So meanwhile, the MOF has extended that exemption of 100% to the shipping income all the way up till YA 2026, right? So it's left to be seen. We are now in 2024. You still have another 2 years to enjoy the 100% exemption from payment of tax on your shipping income, right? That's if you meet the conditions of being a Malaysian tax resident. You either own a Malaysian ship and you carry out the business of transporting passengers or cargo, or if you don't own a ship, or if you don't carry out directly yourself, then if you let out on charter, whether it's time charter or voyage charter, you let out your vessel on a time charter or voyage charter basis to anybody, then that income that you earn from chartering out your vessel on a time charter or voyage charter basis, as long as it is a Malaysian ship, then you will continue to enjoy the exemption from payment of tax up to 100%, right? So that is the 54A exemption that is in place for Malaysian companies that are tax resident here, carrying out shipping operations using Malaysian ships, either on their own or they charter out on a time charter or voyage charter basis, right? So that's 54A exemption for you. And that exemption will apply until 2026. Okay, next slide. Now, what is we talked about some of the keywords in the earlier slide. Now, what is a Malaysian ship? So to qualify as a Malaysian ship and enjoy the exemption from payment of tax at 100%, you must be registered under the Merchant Shipping Ordinance, MSO, right? It must be a sea-going ship that goes beyond port limits. Again, port limits vary depending on the bylaws of each port. And then a vessel that's used exclusively for navigation on lakes, canals, rivers, or coastal waters is not a sea-going ship. So that's clearly excluded. So basically, it's any ship that goes beyond the port limits that would be considered a sea-going ship. And if you are registered under the Merchant Shipping Ordinance, then you meet that requirement. Then they have an exclusion, all right? As you can see below, you cannot be a ferry, a barge, a tugboat, a supply vessel, a crew boat, a lighter, a dredger, fishing boat, or any other similar vessels. So typically your ocean liners, your petroleum, chemical tankers, LNG carriers, container ships, all of those would fall within the definition of a sea-going ship, and they would not fall into the exclusion. But I think the contentious issue in this definition is the exclusion of supply vessels. So basically, that's where a lot of the offshore support vessels that basically provide a lot of services to the upstream oil and gas industry in Malaysia in terms of transporting either goods, supplies, or even manpower to the offshore oil platforms. They are also chartered out to the oil and gas companies, either on a time charter and so forth. So generally, most of them, unfortunately, because of this exclusion, are not considered to be a Malaysian ship, right? So their income that they earn from transporting either passengers or cargo or other supplies will still be subjected to tax and not enjoy the exemption under 54A itself, capital A, right? So cruise ships are also excluded. And even if you have a Malaysian ship, but you let it out on a bareboat basis, that means without providing any crew and anything else, just a bare vessel or a bare ship that you give out to a charterer to use it, then that income from a bareboat charter would also not fall within Section 54A itself, because it only limits to either you operate it on your own and earn income from the transportation services, or you let it out on a time or voyage charter. If you go on a bareboat charter, then again, you are excluded from the definition. So that is where I think the offshore support vessels are unfortunately in that exclusion category under Section 54, subsection 6, and therefore you cannot get any exemption from payment of taxes itself, right? Next slide, please. So if you operate two or more Malaysian ships itself, although they're treated as separate business sources, but in terms of claiming the capital allowances and losses from one against another, that can be done, right? Because it's still considered a shipping business source. So you are entitled, if you have 3 vessels or 4 ships, you will be treated as 4 different shipping business sources. But because they're all shipping business sources, you can aggregate your capital allowance claims, or if you have losses, you can aggregate them and deduct them against each other itself, right? Again, capital allowances under 54A, if you are the owner and you use it in shipping business, you can claim your capital allowances against your statutory income from the shipping business before the exemption. And then it's also deductible against your other relationships, which are exempt. But the capital allowances or the adjusted loss, which cannot be utilized against any non-Malaysian ship. So if you had, for example, chartered in a vessel, all right, from a non-resident, all right, which is a foreign registered vessel, and you use it in Malaysia for transportation of passengers or cargo, then that income would be taxed separately, and any capital allowances or losses that you have in respect of the Malaysian ships, you cannot use that to be offset against the income generated from using a non-Malaysian ship to generate income from carrying on shipping operations itself, right? And basically, your unabsorbed capital allowances and losses from your Malaysian ships, you can carry it forward to be utilized in the future against your exempt income. If you dispose of any ships, then typically there is a balancing allowance or balancing charge, depending on basically whether you sold the vessel at a higher price compared to the tax written down value, then you made a profit, which is a balancing charge. If you sold the vessel at a lower price than the tax written down value, then there is a loss, and it's called a balancing allowance. But typically what happened was that in most cases where Malaysian ships are concerned, right, because of the fact that we had the Section 54A exemption from payment of tax, right, most companies did not claim any capital allowances on the ships itself, because obviously they cost a lot of money, and if you claim the capital allowances, you really don't need the exemption from shipping income. So because they had a 54A 100% exemption, most of them basically did not claim the capital allowances in respect of the Malaysian vessels, which generally are lost, but there's no impact in terms of tax because you have the exemption from payment of tax, right? Let's go on to the next slide. So to summarize what we've talked about, 54A, sorry, all right. Basically, 54A will apply to a Malaysian tax resident who's in the business of transporting passengers or cargo by sea on a Malaysian ship, or if you don't transport on your own, you let out on charter your Malaysian ship on a time or voyage charter basis, then that income from time or voyage charter also will be considered as part of your shipping income, and it will be accorded the 54A exemption from payment of tax. And like I mentioned earlier, that exemption at 100% level is applicable all the way now up till YA 2026. What I heard is that there has been discussions between MOT, the Malaysian Ship Owners Association, and the Ministry of Finance to look at how either this exemption can be continued or whether they want to bring a different regime of taxation for the shipping industry into place. If you look at a lot of overseas countries, especially the Mediterranean countries, the Scandinavian countries, where you get a lot of ship owning companies coming out from, they generally have a tonnage tax regime, which means you pay a certain amount of tax at a tax rate based on the tonnage of your vessel, right? And that simplifies a lot of things, right? In the sense that it's basically based on the tonnage of the vessel times a certain rate, and that's the tax you pay, and you file a simple tax return, and that's done, all right? So it simplifies a lot of matters, and that's something I heard that is being considered here, but I'm not sure exactly where it is at this point in time, all right? Let's go on to the next slide. Now, we've talked about a resident, a Malaysian resident, the scope of tax being on a world scope. Then we looked at 54A, which was the exemption for shipping income from payment of tax, which is applicable to a Malaysian tax resident, all right? And then now we're going to move to see what if you're a non-resident operator. And basically non-resident means you are not a Malaysian tax resident, but you do derive income from Malaysia in respect of transporting passengers or cargo by sea. So when we look at the income derived by a non-resident operator from Malaysia, basically it relates to any income earned from uplifting cargo from Malaysian ports to be taken to another destination outside Malaysia. So every time a foreign vessel owned by a non-resident comes into any Malaysian port to pick up cargo from here, and then that cargo is transported out of Malaysia to a foreign destination, then that amount of income earned from the transportation from a Malaysian port to wherever the final destination for the delivery of the goods is, that income will be deemed to be derived from Malaysia, right? So basically it says that if you're a non-resident, your gross income only derived from Malaysia. So for a non-resident, it's only income earned from Malaysia, not your world scope of taxation in respect of the business of transporting passengers or cargo. And his statutory income will be determined under this basis. So basically non-resident is taxed on a territorial basis, which is basically income earned from uplifting cargo or carrying passengers from Malaysia. Income source outside Malaysia and received in Malaysia would be exempt, right? So generally this would not apply to a non-resident operator because the only income they would earn is from carriage of cargo or transportation of passengers from Malaysia to a destination outside Malaysia. So limited in terms of only carrying cargo or passengers from Malaysia to a destination outside Malaysia. That falls within the definition, all right, of income that is subject to tax on a non-tax resident company carrying out shipping operations in Malaysia, right? Next slide, please. Now, as I mentioned to you, since you have income that is derived from Malaysia, which is when you uplift cargo or passengers from Malaysia, the section 54.3 basically says that what is your income, all right? Because at the end of the day, you could have been paid X amount of ringgit or US dollars for the transportation that you're going to provide, right? But obviously, you have also incurred expenses, all right? You're going to incur expenses to earn that income because you would have to pay for fuel, you have to pay for port charges and various other expenses when you come into Malaysia and you leave Malaysia and all that. So what would be your net income that you earn, which would be subject to tax, right? That obviously makes it a bit more difficult in terms of how you're going to go about computing the income for a non-resident operator deriving income from Malaysia. So they've simplified it to say that basically, if you earned, let's just say 100,000 US dollars for the transportation of cargo, say from a Malaysian port to a foreign port outside Malaysia, and you charge 100,000 US, then your income, all right, that is deemed to be derived from Malaysia is 5% of the 100,000. So that means basically it's 5,000 US dollars. And on the 5,000 US dollars, you pay 24% tax, which is basically 1,200, right? So basically, if you look at it, if you multiply 24% by 5%, you get an effective tax rate of 1.2% of your gross income, right? So it's a minimal amount of tax. And typically, the non-resident who earns income from this kind of operations, that where they come into Malaysia to pick up cargo and take it out from Malaysia, they will normally appoint a Malaysian shipping agent here. The shipping agent, in addition to taking care of all the operational requirements of when the vessel comes into Malaysia, meeting all the statutory and regulatory requirements, they also play the role of deducting this amount of 1.2% on whatever freight income that is earned by the by the non-resident operator. And then they will do the remittance of that amount to the tax office itself, right? So the non-resident basically gets a shipping agent to handle all these matters for him, right? Now, if you are a non-resident, there's another method, because remember the taxation is under world scope. So they also allow you to basically do a formula if you want to do it, all right? But it gets very messy because at the end of the day, you got to get your gross income from Malaysia over your gross world income multiplied whether at the worldwide level you made an income or a loss. So that means if let's say you are a resident in Greece, right? And so what they will require is they will require a certificate to be produced by the Greek tax authorities to show what is your gross income that you have derived from your shipping operations, and then what is your income derived from Malaysia, and then whether when you file your returns in Greece, whether you are in a loss position or in a tax payable position. Now, most people will use this method if they are at a loss position worldwide, right? So by doing that, then you don't even end up paying the 1.2% of the gross income earned in Malaysia. So I've seen some companies do this. Typically more airline operators, because they are sometimes in a loss position on a worldwide basis, so they don't want to pay any tax. They use this method, all right? So it's available, but quite rarely used. So most of them just pay the 1.2% of the gross income whenever they uplift any cargo from Malaysia. That income, they will pay tax at 1.2%, right? So that's for a non-resident. Very straightforward. Just take 5% of the income you earn from providing the transportation service, multiply by the 24%, and that's basically your tax liability in Malaysia, and that's done through the shipping agent. You got no other obligations after that, all right? Let's go on to the next slide. So again, we are looking at a non-resident operator. What if the non-resident operator does not operate a business of transporting passengers or cargo by sea and only derives income from a bareboat leasing arrangement with a Malaysian resident, right? So basically, you're a foreign company, you've got a foreign registered vessel, you do a bareboat lease, right? A bareboat lease basically means it's just the vessel and nothing else. No crew, no stores, no nothing. All right. So I just give you a bare vessel. You have to put your own crew, you have to put your own fuel, and then you want to operate the vessel, you operate it, right? Currently, obviously the tax office and position has been that such income falls under Section 4A3. Section 4A3 basically says that if you make any rent or other payment for the use of any movable property, all right? So it's rent or any other payment for the use of movable property, and that rent or other payment is paid to a non-resident, then that income falls under Section 4 capital A, bracket 3, all right? And if you're a non-resident, then it is subject to withholding tax of 10% in Malaysia. So this obviously is, again, a cost to a lot of Malaysian shipping businesses. And I think it's also a cost to offshore support vessel owners, because sometimes they have to lease in or charter in either ships, or they have to charter in offshore support vessels from overseas, which is from non-residents. And the position taken is that whenever you charter in any vessel, whether it's an offshore support vessel or a Malaysian vessel, or a ship from a non-resident, then that payment, right? The payment itself could be a time charter payment, it could be a bareboat charter payment, it could be a voyage charter payment, not likely, but most of the time it could be either a time charter or a bareboat charter. The position taken is that that income is not shipping income, but it is income that falls under 4 capital A, brackets small 3, right? And because it falls under that, it is subject to tax under that particular section. It is not treated as the business income of the non-resident person, right? So it is treated 4A. If you look at the header itself, it's called special class of income. So they said this is not business income. This is a special class of income. And that rent or other payment is not a business income of the non-resident. And because it's not business income, it does not fall under Section 4, capital small a, which is basically our section that taxes business income, right? So any of you and me carrying out a business, we will pay tax. Our business income will be taxed under Section 4, subsection or bracket small a. But they did a new section under 4 capital A, and they brought these rental payments for use of movable property, which covers obviously your ships and also covers your offshore support vessels within the ambit of 4A3, and basically said this is not the business income of the non-resident, and if it's not the business income of the non-resident, it will be taxed under 4A3, and if it's paid to a non-resident, then the Malaysian payer has an obligation to deduct withholding tax at the rate of 10%. And most of the time you'll find, all right, in the industry, that 10% withholding tax is never paid by the non-resident. All right, they make it very clear in their contracts that if there's any taxes in Malaysia, that tax has to be borne by the party that the charterer, right, the person who charters the offshore support vessel or the ship from a non-resident itself. So at the end of the day, the Malaysian companies end up bearing the cost of the withholding tax itself, right? However, in 2007, there was an exemption order issued by the Minister of Finance. And basically, again, here they said, if you're a Malaysian shipping company, all right? Remember, we talked about Malaysian shipping company being a seagoing ship owned by a Malaysian tax resident, all right? So it must be a seagoing ship owned by a Malaysian tax resident, and it excludes ferry, barge, tugboat, supply vessel, blah, 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 and all that. Everyone excluded. So if you are a company that owns a Malaysian ship and you're a Malaysian tax resident, and if you lease in or charter in a vessel, either on a time charter, voyage charter, or bareboat charter basis, then you are exempted, all right, from payment of withholding tax. So people like, say, MISC, who operates Malaysian ships, and if they charter in any vessels from a non-resident, if they are short of a ship and they want to get a ship from overseas, then when they pay the charter hire rate, whether on a time charter or voyage charter basis, then this particular exemption order allows them to not deduct any withholding tax. All right, so it only applies to that. So again, offshore support vessels, because you are not included in the definition of a Malaysian ship, you cannot rely or place reliance on this particular exemption order to not deduct withholding tax when making payments to non-residents itself. So this is only given to a Malaysian tax resident who owns a Malaysian ship, and he charters in a ship from a non-resident, then he has this exemption from payment of withholding tax when he makes the payment to the non-resident. All right. Let's go on to the next slide. So now I'm going to move on to basically looking at income earned by offshore support vessels. All right. So there are various types of offshore support vessels. And basically, in my view, the income earned by these offshore support vessels, whether it's from a time charter or it's a voyage charter or even a bareboat charter, that should be considered shipping income, all right? Because those vessels are chartered for use by the charterer, whether he uses it to transport passengers or whether he uses it to transport cargo or supplies or materials or whatever it is. The services that are being provided are for transportation, right? And if it's within the ambit of transportation of either cargo or passengers, then your shipping, your income that you earn from those charter hire contracts should be considered as your shipping income. However, as I've mentioned earlier, because of the exclusion of offshore support vessels from the definition of a Malaysian ship, you will not enjoy the 54A exemption, and therefore you have to pay tax, whether you earn the income from a time charter, voyage charter, etc. Right? Obviously, you are allowed to then claim your capital allowances on the purchase or construction of offshore support vessels at the prescribed rates. So most of those offshore support vessels, they cost you quite a bit of money. You probably can shelter some of your tax liability in the initial years from the capital allowances that you claim against the charter hire income generated from the charter hire of those vessels, right? But eventually, when you have already claimed all the capital allowances and if your vessels are still in use, then you will not have any more shelter of capital allowances and you will end up paying taxes, all right? So any operating expenses that you incur, you can claim an outright deduction. Obviously, again, our Income Tax Act has a section called Section 33 that requires you to meet certain tests of deductibility. And if you meet those tests of deductibility, then you can claim your operating expenses. There are also certain exclusions given under the Income Tax Act where certain expenditure, even though you meet the test of deductibility, you can't claim that expenditure at all, right? So private expenses you can't claim, for example, entertainment expenses, which may be incurred for business development purposes. But under the Income Tax Act, there is a particular section which says that you can only claim 50% of those entertainment expenses and not 100%. So although you meet the test of deductibility, there is another particular section that restricts the deductibility of those expenses in full or partially, depending on the type of expenditure you've incurred, right? If you incur losses, then obviously the losses can be set off against all your other sources of income, and the losses that have not been fully utilized can be carried forward to the subsequent years and be offset against your business income, right? So I've just posed a question here. Should you have all your offshore support vessels parked under one company or in separate companies itself? That means each vessel under one company, or do you want to park it all under one company? Now, obviously, from a tax point of view, it will be preferable to park it under one company because then you can offset the income and expenses and also the capital allowances against each other and minimize your tax liability. But obviously, you have to take other considerations like your legal risk, business risk, and so forth. because if anything happens to any one vessel, then that may have an impact on the company's operations itself, right? But purely from a tax perspective, it may be better to consolidate all your offshore support vessels under one company itself. So that's basically how the taxation of income, which is earned by offshore support vessels, will be calculated. Pretty much straightforward compared to what a normal other business would be taxed on. And there's no exemption under 54A given to offshore support vessels. All right. Let's go on to the next slide. Now, we talked about 4A3 just now, right? And as I've mentioned earlier, the 4A3 basically says if you make payment of rent or any other payment for the use of movable property, then you have to pay withholding tax of 10% under Section 109B. And basically, they said any type of payment, right? Whether it's a time charter, voyage charter, bareboat charter of any type of vessel to a non-resident subject to withholding tax, except if you are a company that is a tax resident in Malaysia and you own Malaysian ships. And then if you charter in a vessel from a non-resident, then that exemption order, which I talked about in the earlier slide, would apply to allow you to not deduct withholding tax when making payments to non-residents, all right? Now, the problem we are having here, all right, and this is, it's been an ongoing dispute with the tax office between taxpayers and the Inland Revenue Board, is that they apply a very narrow interpretation of what constitutes shipping income, all right? And as I've mentioned there in the third bullet point, they consider if the contract for carriage of cargo or carriage of passengers, if you use that word or the terminology freight, all right, freight charges, then that freight charges is not equal to rent or other payment for use of movable property, right? That's how narrow they look at it. So the moment you look at a time charter or a voyage charter, then they are saying that that is a rental payment under a time charter or a voyage charter or a bareboat charter for movable property. That is not freight. But at the end of the day, if you look at it, under those arrangements, all right, you are actually letting out on charter your vessel, and that the charterer is carrying out the business of transporting passengers or cargo, all right? So it should be treated as part of your shipping income. But just because the form that you use, the legal form that you use is a time charter or a voyage charter arrangement, all right? And that's how the shipping industry works when you do chartering arrangements, all right? Then they're using that form to come to a conclusion, all right, that that is not shipping income without really looking into the substance of what the whole arrangement is under the chartering arrangement. And that's the sad part, right? So if you put into a contract, instead of calling it time charter, you call it freight charges so much, then there's a likelihood you won't pay any withholding tax, all right? But obviously, I don't think that's possible because sometimes the way your contracts, you follow certain chartering conventions which you have to execute. You still have to have the words time charter, voyage charter, and other things from a legal perspective to make sure those contracts are valid, right? But that's our biggest problem that we are facing with the tax authorities' interpretation of what constitutes shipping income. So they view all this time charter, voyage charter, freight charter, contract of a freightman, any of those arrangements, they just view that as a payment of rent for the use of movable property. And basically, they don't recognize it as shipping income. And therein lies the problem, because when you charter in vessels from non-residents, right, whether it's by an offshore support vessel owner in Malaysia or a Malaysian ship owner, which you probably have that exemption order, but offshore support vessels probably don't have that exemption order to rely on, and therefore they end up paying withholding tax itself, right? So that's the current position, which is taken by the Inland Revenue Board, and they have been very strong with their stand on this position. And so far, I think there have been some cases that have gone to court, and I think the most celebrated case, all right, that went to court. It went all the way to the federal court, and it was ruled in favor of the Inland Revenue Board of Malaysia. Is the Alam Maritime case. I don't know whether you've heard of it, but Alam Maritime was basically a company that was in the business of chartering out offshore support vessels. And they basically also chartered in vessels from non-residents. And they did not deduct withholding tax when making payments to the non-residents on the basis that this was shipping income that was earned by the non-resident operator. And because the non-resident operator did not have a taxable presence in Malaysia, therefore, they should not be subject to any withholding tax, all right, because it's their business income. Okay? But sadly, they lost the case at the federal court level. And now the Inland Revenue Board basically says that is the mother of all cases where Section 4A3 is concerned, and therefore you have to pay withholding tax whenever you charter in any of these offshore support vessels from a non-resident. All right, so that's the position. Okay, let's go on to the next slide. So, like I said, if you compare Malaysia with a lot of overseas countries, they define shipping income in very much at a wider perspective. So all sorts of chartering arrangements, leasing of containers, all of that is considered shipping income in those countries. All right. So typically, if you are a Malaysian company that basically, even you charter out your vessels to another country, to another person who takes your vessels on a time charter or voyage charter, they will not simply tax your income in that country using something like 4A3 and applying withholding tax, right? Basically, if that falls within their definition of shipping income, then they will go back to the treaty to see who has the right to tax that income itself, right? So again, I'm reiterating the point that our tax authorities here apply a very narrow interpretation of what is shipping income and limit it only to a freight payment, right? So I think the main issue is, whether the shipping income as defined under 54A, from chartering arrangements using Malaysian ships, right? And again, if you look at offshore support vessels, is that considered shipping income under 54A, as the vessel do not meet the definition of Malaysian ship? So currently, they are saying that for 54A purposes, if you charter on a voyage or time charter basis, it is still considered shipping income, right? But that's the strange part, right? Where for Malaysian ships, if you do voyage or time charter, you consider that as shipping income and you give the exemption. But if you're not a Malaysian ship, then sorry, your voyage and time charter arrangements are not considered to be shipping income. So you can see how inconsistent they are in terms of applying the law to one party and to another party, which is a non-resident. All right. So, so this is the current position in terms of how the tax office looks at shipping income in Malaysia. All right. Next slide, please. So I'm going to cover the last part here on the double tax treaties. So if you look at shipping income, most of the treaties that Malaysia has concluded with the overseas countries, there is always an article on shipping income, right? And I think the most important thing to remember is that double tax treaties do not, right? And I stress here, do not have any authority to impose tax on shipping income, right? The authority to impose tax on shipping income will always rest with the domestic legislation of the domestic tax legislation of the respective countries itself, right? So if it's Malaysia and Singapore, then you have to look at the Malaysian Income Tax Act, you have to look at the Singapore Income Tax Act to see what are the provisions in the domestic law in terms of how shipping income is subject to tax, right? You go to the treaty only for purposes of relief, right? And the treaties will provide relief by looking at it and saying, yeah, if you earn income in my country, let's say you earn shipping income from Singapore, right? If you earn shipping income from Singapore, I have a right to tax that income because it's derived from Singapore, right? But under the treaties, for purposes of providing relief from taxation, they may forego that right, right? And pass that right back to the country where you are a tax resident. So quite a lot of the treaties that Malaysia has with the foreign countries, they basically, some countries basically give the right of taxation back to Malaysia because that's where the shipping company is tax resident in Malaysia. So they surrender their right, although you earn income from carriage of passengers or cargo in their country, and that income is sourced in the foreign country, because Malaysia is on a world scope of taxation for shipping income. They then surrender that rights back to Malaysia and said, well, if you're a Malaysian tax resident and it's shipping income, then I forego 100% of my rights, and basically I give you relief from taxation in Singapore, but you obviously have to end up paying tax in Malaysia on that income. But some countries, they give a 50% exemption, all right? So some treaties that I've seen, they give a 50% exemption. So if you earn $100 in a particular country, then you get exemption up to 50% of that income. And on the balance of the 50%, you pay tax in that country. And obviously, if you pay any tax in that country, and Malaysia also imposes tax on a world scope of taxation, then in Malaysia, you can get what we call a double tax credit or a relief from paying tax again on the same income because it's already been taxed in a foreign country, right? So that's is also one of the reasons why we have double tax agreements, to ensure that there's no double incidence of taxation, one in the source country and the second time when it is taxed at the country of where the company is a tax resident, right? So I think my last point is the point that I just want to talk a bit in detail, all right? Basically, World 4A3, all right, which treats rental of movable property as a non-business source, can it override the shipping income article under the double tax treaties? Or the treaty position should prevail over the Income Tax Act? I mean, this is, like I mentioned earlier to you all, just now, the Alam Maritime case, right? I mean, if I just take two steps back and just sort of give you some background on why 4A3 came into being, was the Inland Revenue Board of Malaysia lost a tax case, all right? That name of the tax case was called Euro Medical Industries. And basically, it was a UK company that argued that they provided management services to their Malaysian subsidiaries, and that management services should not be subject to any tax in Malaysia because it was the business income of the UK company. And they did not have a taxable presence, or what we call a permanent establishment in Malaysia. And therefore, that income should not be taxed in Malaysia, right? And neither was it royalty or any other type of income. So they won that case. That was also a Privy Council case, which they won. And once the Inland Revenue lost that case, they very quickly amended the law, right? And they brought in Section 4, capital A, because then they said, this is a special class of income. This is not business income. You cannot go and rely on any treaty to get any relief from taxation if you fall under 4, capital A, 3, especially for shipping type of income, right? And that is the position they took in relation to Alam Maritime case, which I just spoke about, where it was a time charter arrangement of vessels from mainly a Singapore company to a Malaysian offshore support vessel owning company. And the Inland Revenue said, well, all those payments you made to Singapore company are subject to withholding tax because it is a rent or other payment for use of movable property. All right. The sad part of this case was that the legal counsel who argued the case took, I would say, a straitjacket approach and went straight to the point and said that the Singapore company does not have a taxable presence in Malaysia. And therefore, if I don't have a taxable presence in Malaysia, I should not be subjected to tax in Malaysia, because business profits can only be taxed in Malaysia if I have a taxable presence here. And this income that I earn from my chartering arrangements is my business income in Singapore. And because it's my business income, I should not be taxed in Malaysia, and the treaty should provide me relief under the business profits article. All right. But there is also a shipping profits article, as I mentioned to you all, and they did not rely on the shipping profits article. So they went on the business profits article to argue that they were not subject to tax in Malaysia. They won at the special commissioners, they won at the High Court, they won at the Court of Appeal, but they lost at the federal court. And the reason they lost at the federal court was primarily because the old double tax treaty between Malaysia and Singapore had a definition of business income, right? And that definition of business income under the old double tax treaty between Malaysia and Singapore specifically excluded income from the operation of ship from the definition of business income under the treaty. Most treaties don't define business income, but our old treaty with Singapore had a definition of business income. And because it had a definition of business income, and it excluded income from the operations of ship, therefore, it did not fall under business income, right? So obviously, when the federal court looked at it and said, you are arguing it's business income, and you're coming to the treaty for relief under the business profit article, but the business profit article says, sorry, business income does not include income from the operations of ship. So your income earned is not business income anymore, and you can't get any treaty relief, all right? So it falls under 4A3, and you pay tax in Malaysia on that, all right? So that was the case. My view is that if you look at Section 4A3, or Section 4A in general, it basically says, notwithstanding Section 4, all right, notwithstanding Section 4. Section 4 basically is the section that has all the classes of income, from business income to employment income to interest to rental and all those things. It has those classes of income. So it says, notwithstanding Section 4, so 4 small a, which deals with the class of business income, but it says subject to the other provisions of the Act. Okay, so which means that 4A can override Section 4, but it cannot override the other provisions of the Act, right? And if you go into Chapter 8 under the Income Tax Act, where your shipping income falls under Section 54, falls under Chapter 8, there's a specific provision in Section 52 there that basically says that if there are any provisions prior to Section 52, all right, which are inconsistent with the provisions of Section 54, then the provisions of Section 54 will prevail over any other provisions. So the argument should always be built, yes, you are saying it's 4A3, but you're subject to other provisions. And if I can prove that this income falls under Section 54, then I can rely on Section 52 to say that 4A3 is not consistent with Section 54, right? And if it's not consistent with Section 54, then 54 should prevail over 4A3. And if it prevails, then you fall under shipping income, not business income, but shipping income. Then you go to Section 132 of the Income Tax Act, which talks about double tax agreements. And the last sentence in that particular section, it says, the provisions under the double tax treatments will always prevail, notwithstanding anything in any written law, right? So that means the DTA will always override the domestic legislation. So if you go under shipping income, and then you go to the shipping income article under the treaty, and you argue that it's shipping income, and if the treaty provides you relief from taxation in Malaysia, then basically the income tax cannot apply for A3, right? But that's how you would have to argue, in my view, if you want to take a position on this, right? And that's my personal view on it. And that's something that, I mean, you guys are lawyers, so probably you probably will be able to appreciate what I'm trying to get across, right? So that's basically, I think, my section all on shipping income. Can we move on to the next slide? So I'm very quickly going to run through on service tax implications, all right? How does it impact ship owners and also offshore support vessel owners in terms of whether you charter out your vessels on a time charter, voyage charter, bareboat charter, and so forth, right? Let's just go on to the next slide. So you must remember that in March this year, the Customs Department made some drastic changes to the Service Tax Act to widen the scope of service tax, all right? So one of the new items that they brought in was repair and maintenance services, right? So again, obviously, your shipping industry, where you're a ship owner, or if you're a offshore support vessel owner, right? Obviously, those vessels have to go for repairs and maintenance, whether you talk about dry docking or normal repairs and maintenance that you need to go for, you will be incurring expenditure in respect of that. Now, previously, that was not subject to service tax, but now, with these changes brought in from March 2024, all these types of services are now under maintenance or repair are subject to service tax, right? So training or coaching also is, even if it relates to matters outside Malaysia. So I've just given an example here to say, basically, Alam, which is your training academy for ship owners, if they provide training to online customers who are located outside Malaysia, that will be subject to service tax now, right? That's how they widen the whole scope. We go on to the next slide. All right, I'm not going to talk too much. This is just some minor changes. Let's move on to just hold on there. I just want to highlight brokerage services, all right, which have now been brought within the ambit of service tax again. So any brokerage you pay to anybody for chartering of vessels, it is subject to service tax. So sometimes you do appoint brokers, or people will appoint brokers to get a vessel or a ship for them. And then that vessel, the broker charges you a fee for his services to find a ship or a vessel for you. That brokerage fee will now be subject to service tax at 8%, right? So that's, again, another impact that could be on your shipping industry, all right? Next. Now, for repair and maintenance, basically, they have what we call a group exemption, all right? So basically, if you provide services, if you are a repair and maintenance service provider, and you provide services to a particular company, but in return, you also need to obtain services, all right, from another third party who's also doing some kind of maintenance work, then basically what you can do is you can apply this B2B exemption, all right, where that subcontractor of yours should not be charging you service tax on repair and maintenance services, because you will eventually be charging service tax to the ship owner or the vessel owner for the repair and maintenance services you provide. So if you go into say for dry docking, and the person who provides all those repair and maintenance services at the dry dock engages another particular contractor to do the painting of the vessel, right? And that contractor then charges for that maintenance work to the dry dock owner, and then the dry dock owner will charge you. Then that's service provided from the subcontractor who did the painting work should not be subject to any service tax. but the dry dock owner will charge you on all the services, 8% service tax. This to just avoid service tax on service tax itself, right? So that's a kind of exemption that is given there, right? Next. So again, coming back to repair and maintenance, people made a lot of hue and cry about bringing all these services within the ambit of tax. So basically, the Ministry of Finance then came up with a policy to provide certain exemptions from payment of service tax to both airline and shipping companies. So basically, they said that if you are a shipping company that's registered with the Maritime Department of Malaysia and you obtain any repair, maintenance, or overhaul services from any approved maintenance organization or a shipbuilding or ship repairing service provider which is approved by MIDA, then they will not charge you any service tax, right? So as long as your vessels are registered with the Maritime Department of Malaysia, so most of your offshore support vessels will be registered with the Maritime Department of Malaysia. And if you send them to any, say, the MMHE shipyard in Pasir Gudang or to the Kencana facilities in Lumut and so forth, then by right, you should not be paying any service tax on the repair and maintenance services. There is this exemption given under this service tax policy that is effective from March till December 2027, right? Next. Logistics services was something that they brought in March. And again, as you can see, it applies across the board for all types of logistics services, including supply chain, warehousing, port, airport services, your shipping services, primarily your freight charges for transportation of cargo is also within the scope, but there are certain exemptions which I'll talk about. And anything to do with transportation and distribution of goods will be subject to service tax now. The rate under logistics is 6% instead of 8%. Courier services and then customs agents also fall under logistics services itself. So excluded are if you charge your freight for a point in Malaysia to a point outside Malaysia, there will be no service tax on the freight charges. If there's freight charges to you from a point outside Malaysia to a point in Malaysia, again, there will be no service tax on that. Door-to-door transshipment, again, transit, and all those are also excluded from the scope of service tax under logistics services itself. Next. Again, there is the B2B exemption given, right? So if you are transporting goods for a particular customer and you subcontract part of the work to another transporter to provide that service, then as long as both the subcontractor who is providing transport services and you who is providing transport services are both registered for service tax, then the subcontractor will not charge you service tax on the basis that you, when you charge your final customer for the transportation service, you will be charging service tax itself, right? So again, to prevent the imposition of service tax on service tax, right, in relation to logistics services. So that's why they have this business-to-business exemption provided. Okay, next. So again, another service tax policy that was introduced, right? So this policy, primarily, the first bullet point talks about the B2B exemption, which I just mentioned. So they allow the B2B exemptions to prevent the cascading of service tax on service tax. If you have appointed subcontractors who are providing the same services as what you are providing to your final customer, that's basically to ensure that there's no cascading of service tax, right? So that's the first bullet point, which I talked about in the earlier slide. Then they talked about special areas and designated areas, right? So designated areas are Labuan, Langkawi, Tioman, and so forth, right? So this, if anything is happening inside these areas of Labuan, Langkawi, and Tioman, right? then basically there will be no service tax to be imposed, all right? Designated areas are things like special areas are things like your bonded warehouses, licensed manufacturing warehouses, free zones, and so forth, where again services provided within those areas will not be subject to any service tax. Subject to any service tax, except if you are a customs agent operating in a designated area, or you're a customs agent operating in a bonded area, then basically the customs clearance services that you provide as a customs agent and you charge for those services, they will still be subject to service tax, even though they are provided in the designated area or special area, right? So again, in terms of freight charges, under this policy, they made it very clear: transportation or delivery from a place outside Malaysia to a place in Malaysia, transport or delivery from a place in Malaysia to a place outside Malaysia. Again, all your freight charges not subject to service tax. Then, if you are providing transportation services which is end-to-end, all right, from start to end under one airway bill or one consignment note, you may be using your related companies to provide the various service in between, then again, these are all considered to be one service and not subject to service tax, right? Next. So again, the transit activities, no service tax will be charged. And then basically ocean freight for transportation of goods from West Malaysia to Sabah, Sarawak, and Labuan. This ocean freight is not subject to service tax. From Sabah, Sarawak, and Labuan back to West Malaysia, again, no service tax. And transportation between Sabah, Sarawak, and Labuan, again, no service tax, right? So these are some of the exemptions that they have given from payment of service tax in relation to your freight charges for transporting of goods, right? Within Malaysia, within West Malaysia and East Malaysia, within East Malaysia itself, and so forth, right? Next. So basically, what is the impact to you, right, in terms of ship owners and offshore support vessel owners? The port operators, right, all the services provided by them will now attract service tax, right? So this includes things like your port dues, your berthing dues, your pilotage, your mooring, your tugging inwards or outwards, any agency fees, the shipping agent that I mentioned just now, where you appoint a shipping agent to take care of your operational statutory requirements and so forth, and they charge you an agency fee. That is also subject to service tax, right? So obviously there will be some increase in costs when your vessels call at Malaysian ports, because all these type of services which previously never attracted service tax will now attract service tax at the rate of 6%, right? So with that, I've come to the end of my presentation. Thank you very much for your attendance today, and I hope the session has provided you with some good insights on how shipping income will be taxed in Malaysia, plus also given you a quick overview of the scope of service tax in terms of the expansion, how it will apply to your business, right? With that, I hand back over to the organizer, and I'm more than happy to take any questions that are either there in the chat box, or if anybody wants to bring them up, I'm more than happy to take them now. Thank you.
Thank you, Mr. Bhupinder. We do have a few questions that have been posted in the Q&A box. I will read a select few for you. Then perhaps if you are able to address it, you let us know and continue to address it.
Sure.
Okay, let's start first with the Q&A box. Okay. The first question that they ask, can you elaborate on Labuan Offshore Company tax savings benefit for an OSV company?
Okay. So I think Labuan Offshore, right, the main benefit from a taxation perspective was 3%, right, because they have a special tax rate for income that you earn from providing chartering services. All right. So a lot of people registered their vessels with Labuan companies and they paid tax at 3%, right, on just your net audited profits. However, as in 2019, if I'm not mistaken, and 20, they changed the law, right, to say that if a Malaysian company chartered a vessel from a Labuan company, right, and let's say I have to pay 100 ringgit for the charter hire to the Labuan company, I can only claim a tax deduction of 75. I can't claim a tax deduction of 100%. So the 25 ringgit becomes a non-deductible expenditure for the Malaysian company that charters a vessel from a Labuan company. All right. So effectively, if you take 24% times 25% disallowance, effectively it works out to an additional 6% tax cost to the charterer. All right. So I think currently right now, a lot of the Labuan companies that have been using this leasing structure basically having second thoughts of whether they should still continue using Labuan companies, because obviously, why would someone want to lease a vessel from you and then suffer a 25% disallowance and pay an additional 6%? So it's no longer very attractive, I would say, right? And a lot of companies are looking at whether they can whether they can basically kind of either re-domicile, right, a Labuan company back to come under the Malaysian Income Tax Act, so that they are then subject to the income tax provisions. But obviously that's taxed at 24% that you have to take into mind. But obviously you can claim a lot more tax deduction. So I think it's something that I think has to a certain extent affected leasing operations from Labuan companies to Malaysian companies. So that's why I don't think it's so attractive right now. Right.
Thank you, Mr. Bhupinder.
Yeah.
Let's carry on. There's a few other questions. Okay. There's a few questions in respect of withholding tax. One of these questions is basically like this. If they charter an offshore Singapore vessel, they would have to pay for fresh water and marine gas oil. But they would not generate income from the fresh water and the marine gas. So the question is whether they would need to pay withholding tax for that transaction.
In my view, that those are supplies, all right, which you are basically because at the end of the day, I don't know what sort of charter. If you are on a time charter arrangement, then basically the time charter would come with water, would come with fuel and everything else, right? But obviously, what I think happens, one is that at the end of the charter arrangement, normally for water, right, and for fuel, right, they do have a settlement, right, to say, hey, you started the time charter, you had so much of fuel, and then when you ended the charter, there's so much of fuel. So if you over consume then what you had, or say if you had 1,000 liters of fuel, and by the time I gave you back the vessel, I should be having 1,000 liters, all right? But now I only gave you back the vessel with 500 liters. So I've consumed 500. So I need to pay you for the 500. So my view is that those kind of payments that you make for those 500 liters, right, which you consume, that shouldn't be subject to withholding tax. Or say they gave you so much of water on board and then now there's less, you didn't make it good, so you have to pay for the use of the fresh water. I believe those shouldn't be subject to withholding tax.
Thank you, Mr. Bhupinder. Let me just see what other questions are there that I think should be relevant for today. Okay. Wow, questions are quite coming in. Thank you for your questions, everyone. We'll deal with it one by one. Some of the questions, I think, you may need to take it with Mr. Bhupinder separately. Yeah. Anyway, let's carry on. This person says that he works for a Malaysian oil and gas company that often charters foreign vessels and has been paying withholding tax for those non-residents. What are the reasons those residents refuse to take on the withholding tax as tax credit to offset their tax liabilities in their home countries, say Singapore?
Yeah, good question, right? And I think that was the challenge I also always had when I used to work in Petronas, because we used to also lease in a lot of non-resident vessels, right? And whenever we signed this contract with the foreigners, they always said that right? But my view is that, like if you take this example of Singapore as what they've just mentioned here in this question, all right? Now, even if they pay withholding tax in Malaysia, right? And if they're taxable in Singapore, they should be able to get a tax credit back in Singapore, right? For the Malaysian withholding tax paid. So that's the point that I've always been arguing with these foreign companies, right? But typically, what happens is that when all these contracts are being negotiated, right, they never bring their tax people to the table, right? They only have their commercial people, their business people, and their commercial and business people don't understand tax. They don't know tax, so they just said, "Hey, I'm chartering this to you for 100. I want 100 in my pocket. I don't care whatever taxes and all that." So when you tell them to bring your tax department in and have a chat face to face with the tax department people, right? And say, hey, look, even though you pay withholding tax in Malaysia, you can claim back that withholding tax in your country, then why are you not paying the withholding tax? Because that becomes an additional cost to the Malaysian company. And currently, the worst thing is that the Malaysian tax office is taking a position that if you bear withholding tax of a non-resident, you also can't claim a tax deduction for that withholding tax. So it's a double hit, not only the 10 plus another 24% on that, right? So I think it all depends on the negotiations that you have to do. And I think the only way to get this is to actually get, if the guy has got tax people in the non-resident, then get them on the table and talk face to face. That's what I used to do to try to resolve some of these issues. Right?
Okay, thank you, Ms. Bhupinder. It's almost 5, so I'll just read out one final question. Just give me a second. For the rest of the questions, feel free to contact Mr. Bhupinder, or you can get us to forward your questions to him on your behalf. Last question is this. Do you think that a better way to give a tax exemption to shipping companies is when they have transitioned to greener and more renewable fuels?
Well, I think that's where everyone is going right now, right? I heard that in this budget itself, it should be next month, on the 18th of October, there are going to be a lot more exemptions for doing things that are green in nature. I don't know whether that's something that's going to be extended to the shipping industry, but I've also heard that they are thinking of carbon tax, right? So for emissions that you make into the atmosphere, you may end up paying carbon tax. So again, ship owners could possibly be affected because obviously you burn fuel, right? And when you burn fuel, you are giving emissions to the atmosphere. So there may be carbon tax implications. But obviously, I think for shipping income, I think in my way, the easiest way of trying to administer this taxation and giving the shipping industry a lease line, all right, would be just to bring in tonnage tax, because I've seen that done in all the Mediterranean and the Scandinavian countries. It works very well. Compliance is very straightforward, and people are happy to pay the tax, and that's it, right? And the government has, from a government perspective, they have given this exemption for so long, right? So they have not collected any tax on shipping income. So it's not like it's a loss of income to them, right? But if they do a tonnage tax regime, they probably get some amount of tax, right, from all the vessels, and they will be happy, and the ship owners will be also happy. And that's, I think, what should be done in my view.
Sure. Yeah, and to answer that last question, I believe Mr. Bhupinder has addressed it in his slides, that the ancillary services are subject to these taxes, service tax. To the question that everyone has posed, many of you have posed in respect of the slides, subject to Mr. Bhupinder's permission, we will circulate a copy of the presentation slides to the registrants of today's session. And then last but not least, before that, thank you, Mr. Bhupinder. Last but not least, just a very short note on the Asian Maritime Law and Business Conference 2024 that we are planning to have on the 28th and 29th of November 2024. Registration is already open. We have multiple sessions that have been arranged, including in respect of Asian ports and green ports, sustainability and greener shipping, shipping funding issues and market trends, war risks, emerging issues, issues affecting freight, container bulk shipping, maritime trends, maritime arbitration and case law development, as well as a session with presidents of National Maritime Law Associations. So as you can see, we would be addressing quite a number of issues which would pertain to the shipping industry. This would be relevant to you if you are indeed in the industry, and I hope it would be very helpful. Registration again is open. Feel free to contact us if you have any questions. The Secretariat will be circulating a copy of the brochure to you if you have registered for today's seminar. Thank you very much again, Mr. Bhupinder. It was a pleasure to have you on board with us today. I believe that everyone also appreciates you, judging by the chat box, which is full of thank you notes for you. For everyone, we'll be circulating a copy of the presentation slides after this to those who have registered with us. Thank you very much, everyone, and we hope to see you again at the next session.
Yeah, thanks, Juan, again, and to you and your team for organizing this. And you can share the slides with the participants. And if there are any questions, like I said, you got my email address. They can post those questions to me, and I'll be happy to answer them for them. All right.
Yes, we will include Mr. Bhupinder's email address as well in our circulation of the slides. Thank you, everyone.
All right. Thank you, everyone. Take care.
Have a good weekend.
Bye.
Bye-bye.